Hi there guys, hope you guys are doing well. I'm doing great. Just want to walk you through what I'm looking at on the Nasdaq this week, and also the main strategy that I like to use on the Nasdaq. I'm just going to walk you through the strategy and what I think is going to happen next on the Nasdaq from this week. I think we may be getting the center bull run, or the it's called the center rally, or the Christmas bull run. We may be getting that coming this week. It normally goes on from somewhere in the middle of December, sometimes a bit after the middle of December, up until the 25th of December. So from on the daily time frame, we can see here that price is clearly respecting this trend line. We've got 1, 2, 3, 4, 5 touches, so we may get a 6th touch here on this trend line over here. So this is the daily level that I'd be looking at. The reason being is we can see the points of control. If we take this volume profile from the bottom of the swing to the high of the swing, we can see this big supply coming off of this point of control. But then we can also see this area here, which is the second largest volume area within the volume profile for this order block. We can see this zone and also this trend line. If price does come down to here, it will respect this volume profile order block, and it will also respect the trend line. Okay, that's on the daily time frame, but I'm looking at the 4-hour time frame for an entry this week. And the reason being, I just want to show you here quickly, there's a number of reasons. One of the reasons is that we are getting a stochastic divergence. We can see our price is making lower lows, but the stochastic is making higher lows. Plus we're getting a crossover there on the stochastic. So that's one reason. Another reason is we're getting a break of structure. So we can see prices closed above all these highs over here. We can see our price has just closed above all these highs, and now it's pulled back. Okay, we're getting, if I bring up a volume profile, if we go from swing low, swing high, you can see that price is also rejecting we're getting a big hammer coming off this point of control. So this main order block over here, this main volume profile POC, we're getting this big hammer coming off this actual zone. Okay, and the last reason is if we bring out a Fibonacci, if we go from swing low to swing high, we can see that we're rejecting the 78.6 fib. We're getting a big hammer coming off the 78.6 fib. We drop down to the hourly time frame, we can also see a big hammer. Another big hammer on the hourly time frame. We're also getting stochastic divergence also here on the 1 hour. Okay, so in terms of market structure, this is a break of structure. Now we're getting the pullback, and now this could be the continuation higher. We can see over here, if we do go from here all the way back up to all-time highs, we can see this is basically 9,500 points from here. The 9,500 point move. We go back to this big move, we can see from here to the upside, this was a 23,000 point move. Just want to show you guys break of structure. What I mean by break of structure is we look at market structure, we can see our price is making higher lows. Then we can see price pushed up and broke structure. So this leg from here to here, we can see it closed here and it broke the highs of all of these higher lows. So this is called a break of structure. I'll put up a diagram on the left here for you guys to understand quickly what break of structure is, or in terms of market structure. Because another thing you can do is, which will save you a lot of time and money. A lot of amateurs, a lot of retail traders will, as price is pushing down, they'll try to take entries based on price action. So what they'll do is they'll just try and take entries just based on candlesticks. So they'll take an entry there, it'll fail. They'll take an entry there, it'll push up, but then it'll fail. Now they'll take entries, but they won't ever be able to catch the main move. So what you should be looking for is firstly break of structure. Like in this case over here, we can see price put in a high over here, but it didn't break structure. So this is not a break of structure yet. Over here we can see price pushed up and it broke structure. So once you see the structure break, then you'd be putting in your volume profiles and your Fibonacci's to wait for a pullback. Like in this case, we can see price pulled back to the 61.8 and then rejected and then moved up. So basically we can see this was a break of structure, and if we also we come up to this recent move over here, we can also see price has broken structure. It keeps pushing above here. Now it's finally broken and closed above here. Now it's pulled back. Now we're getting this major rejection off of this 78.6 fib. Plus we're getting the divergence. We're getting the POC, the order block volume coming from. We can see the volume coming off this order block, and it's a POC, a point of control. So that's what I'm looking at on the Nasdaq. If this level fails, then what I'll do is I'll dollar cost average. If you guys don't know what dollar cost averaging is, it's basically you can split up your positions. So if price fails on this level, then you can split up your positions in 2 or 3. So if price drops, you can this can be your first position, and then you can put another position over here. But obviously, with your risk in total not being more than 2 to 3% of your whole account, even with split risk, in total, don't ever risk more than 2 to 3% of your account per trade. But you can dollar cost average, meaning you take a small position here. If it fails, what I do is if this level fails, then I'll hedge. And when I see a rejection coming off this level, I'll release the hedge and add my second small position. And as price moves up, you'll make money on this position. Price will only have to move up halfway in order for you to break even. But if price breaks above, so once it goes past the halfway point, you'll be making money on this, on both positions already. And then as price breaks this entry, you'll be making money on both those, on basically both those positions. And you can even add another position if you see more rejections going up. Or you can just leave these 2 positions running to the all-time highs. Or maybe you can just target this level and pull out, but we might see something like this. Basically, price push up and it may break above the all-time high, come back, and that all-time high may act as a support zone, and then we may see the price carry on pushing higher up. We may see it because it has reached 16,750. We may see it heading up to 17,000, then all the way up to 17,500 and so on. But in realistic terms, probably target the all-time high and maybe leave a little bit on the table to run, or you can just close out and then look for re-entry on the test of this all-time high. So we can also see another interesting thing here about this push down, as we can see they've flushed out. It's called a flush basically, or a liquidity grab. So we can see they've come down here and it's called a flush, where they've taken out all the liquidity from these lows. Okay, so all the guys that got long from here based off this bar over here, they've stopped all of these guys out. And now it looks like they're going to be heading further up from here based on this big hourly hammer. So this is quite a strong level, as you can see, and this is just what I'm looking at for this week and going forward, possibly the next Santa rally. So we'll just see how it goes this week. So please leave a like, please comment, and please subscribe. If you learned anything from this video, if you found value, please give it a thumbs up, and support the channel, support me as well. So I hope you guys have a good trading week, and I look forward to making more videos to help you guys out in the future. Peace, guys.